Hello everyone, welcome. A bit late, 6 minutes late. I'm really sorry for that. So hopefully you can hear me loud and clear. Today we are gonna see a volume price analysis, something that I don't tend to cover very often. Just as usual, I would like to confirm whether you can hear me loud and clear. I would like also to remind you that this is recorded. This webinar as usual is being recorded. So once we're done and once the team upload them on YouTube, you will be able to receive the recording. Just a quick yes and a no in regards to the audio, and in regards to whether you can see the slides as well would be brilliant. Yes, we can. Thank you, Bruno. I was super fast. And Andria needs to provide you the PDF as well. The file, save as, PDF file. I'm going to upload the PDF version right now. So you can find the slides in the handout section as usual. Okay, there, it's there. We will be able to see it soonish. So, okay. So we are good to go. Loud and clear. Good afternoon. Good afternoon. It is perfectly clear. Thank you very much. So we are good to start. Fortunately, I need to go through the admin as usual. So, disclaimer: this material is provided as a general marketing communication for information purposes only and does not constitute independent investment research. Nothing this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the user is solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved and taking into account your investment objectives and level of experience before trading. And if necessary, seek independent advice. Please read the full risk disclosure in our website, along with any legal documentation that you might want to check. So, this is the email address. Just a quick reminder, webinars@hfm.com. So feel free to contact me, Stuart, support team, for anything you want. I keep saying that it's not an email solely for webinars. You might struggling with your strategy. We might struggling to understand something. I mean, I don't know, but regardless, we're here to help, okay? Don't forget that. So let's be quick because we have a lot of slides to cover, 33 to be more precise. Sorry for that. Hopefully I'm gonna manage to cover everything. So we're gonna go through what is volume, why it's so important, how to measure it, and once we finalize and I understand the volume and its significance, we're gonna see how to trade. How to trade based on volume, how to trade breakouts, how to trade trending stocks, how to trade volume spikes, how to avoid false breakout, and whether you're gonna, at the very final stage of this webinar, I believe you will be able to say, yes, volume is an indicator that I could use, or no, volume is not an indicator that I could use. It's not for me. I prefer to stick what I'm already good at. So it's not for everyone, right? I keep saying that you need to use things that you understand, okay? Each one of us has his own approach, his own understanding. We are different preferences, so it's okay. I am obliged to present everything that I can, but it doesn't mean that every single thing that we cover is for everyone. So, perfect. Let's go through the slides. So, first of all, what is volume? By saying volume, we are referring to the measure of how much of a given financial asset has been traded in a given period of time. So, just very simple, guys. Volume is how many recorded trades they have been placed on that particular asset on that particular period. For example, today it's Wednesday. We're looking at the daily chart. We can see, and we check the volume of the daily chart of, I don't know, Euro USD. The volume will show us all the trades that have been placed for Euro USD today. Or we're going to check the 1 hour chart. We're going to see all the trades that has been placed the last hour for Euro USD. With this understand, it represents exactly the amount of order placed. Yes, the amount of trades. What do you mean order placed or transaction trades? Not pending orders, they are seen on actual open positions. Actual trades, not potential ones, not pending orders, okay? How many people right now, they have open positions on the particular asset, okay? Because orders means, okay, we can consider orders the pending orders as well, something that it could potentially open. No, volume keeps a track on the recorded trades, so open positions only. So you know, so as I said, it is based on the specific period. It could be monthly up to even 1 minute period. Okay. So you know, think it like that. For every buyer, right? There needs to be someone who is selling, right? So if we have a buyer for a particular share, we need to have someone that is selling those shares in order to be bought. Just as there must be a buyer in order for a seller to get rid of his or her shares. So this battle between buyers and sellers for the best price in all different time frames creates movement, while in the long term, technical and fundamental factors are also play out. So why what's so important about check the volume? So using volume to analyze an asset, either stock, either financial asset, forex asset, FX cross, and etc. It can bolster profits and also reduce risk. In general, this is the case for every single indicator, right? We use indicators because we want to bolster our profits and reduce our risk. And this is another indicator, the volume indicator. What's the advantage of volume analysis? It's that it cannot be adjusted. So it is difficult to manipulate it because it reflects the true state of the market. Okay, so it cannot be adjusted. Also, actually, because it's such a simple indicator. You can see that at the bottom. Okay, you can see in the bottom how simple it is. Because it's a so simple indicator, it can be often overlooked. Volume information, even if you don't use the volume indicator, volume information can be found just about everywhere. A website, I mean, everywhere, literally everywhere. But it's not the popular tool or widely known or widely used, to be honest. Few traders or investors know how to use this information to increase their profits and minimize risk. So what we mean by volume analysis? Simple. The technique of assessing the health of a trend based on volume activity. So as you can understand, volume is one of the oldest day trading indicators in the market. I would dare to say the volume indicator is the most popular indicator used by market technicians as well. As I said, it's not for everyone, right? Just use whatever makes sense to you. So what we have over here, it's just simply a chart of dollar CAD in a daily chart. And beneath you can see the volume indicator. So as you can see, it's been drawn either with just green lines, like the previous slide that I show you, or green and red. Depends on which indicator you're using. I mean, you can find both in MT4 and MT5. So if I just put my slides on, okay. Just a second, to show you something. So how you can apply it on the left-hand side, right? We'll switch on everything. So over here, you can see 4 different volume indicators. We're gonna go one by one today, so don't worry about it. If you drag and drop the volume indicator, you see it has both green and red lights on, okay? If you, on the other side, if you go to your right click and click volume, you can again see the volume indicator, but just with green lights. It's the same thing. Can you see that? The fluctuations, they are exactly the same. So why we have only green ones by default, and if you apply the volume indicator from the navigator, we have green and red. They show exactly the same prices, but red considered to be the negative the negative indicator, while the green lines is considered to be positive. Okay, so that's pretty much this is just a comparison of the previous day. So you see the very first line was green. The next day the volume detected, so that's why it's with the red. The very next line is slightly less than the previous, so again red. Then it spiked higher, so it's green. The same stands for the next one. Then it started falling, so red, and so on and so forth. So we still have seen trades being recorded, but comparison with the day before, it was less or it was more. So in the most trading platforms, the volume bars are either full in green or both, like here. So green bars are printed if the asset closes up for a period, and red bar indicates an asset closes lower for a given period. Okay, that's pretty much it. So the color coding is not so significant as is more significant to check the length of the volume, the length of the bar, and whether we have continuously up rising volume or continuously lower volume, rather than checking the color. This color coding need not mean that there was more down or up volume for the period. It just represents how the asset closed. Okay, so yeah, you should focus on observing first, obviously, how your candles close, and then whether there is an increase in the volume or a detraction in the volume. Okay, the tricky part in volume is that it provides conflicting messages. Okay, so that's why it's very not difficult, it's very bit tricky, but you need to assess what the volume is telling you in conjunction with price action. Okay, so that's the key factor in order to be able to turn a profit in the market. So you need to assess the volume, compare with the price action in order to understand what's going on. Okay, so don't worry, even if you how to get started. Don't worry, to keep on track with me. We'll have plenty of examples, so we're gonna take it step by step. So four common setups for analyzing volume in order to identify the strength of the move. So initially, what we're going to do in this webinar is that we will see how to assess the volume indicator to help us determine the market's intention, as we already said. So when we analyze the volume, there are some guidelines. Okay, these guidelines will help us to determine the strength or weakness of a move. So you know, in general, traders, and I believe that's the case for you guys as well, like for everyone, most of the traders tend to be more inclined to join strong moves and take no part in moves that show weakness. Or we may even see people searching for an entry in the opposite direction of a weak move. This is, I don't know, human nature. I don't know why or where I can base that, but it's something that is common. I mean, people tend to prefer entering a position if there is a strong move on the upside, so bullish one, instead of taking part on a potential weakness. So as I said, there are some guidelines in order to analyze the volume and determine the strength or weakness of a move. So these guidelines do not hold true in all cases, but they are a good general aid in trading decisions. So, okay, I said for common setups, I did a mistake, but yeah, I have 5 over here. So in order to identify strength, the strength of the move, we need to check volume, check what's the market interest, to check whether there are any extreme moves and any overbought or oversold moves, any exaggerated moves. This is what we mean. Identify whether we're getting any bullish or bearish signals, or whether the price is about to reverse. So everything. So we need to check our price action, whether it gives us any of these signals, and then to check in combination with the price action to check our volume. So the theory says that when volume increases sharply, Okay, like here, can you see my, I believe you can see it. Like it's rising here. So theory says that when the volume increases sharply without a significant change in the price action, the price will eventually jump either upwards, eventually jump upwards, and vice versa. If the volume detects, like here, then theory says that the price is about to reverse. So it's what we're saying, you know, what is meant by market interest. So it's basically, this is a bit misleading, right? So market interest, we're referring to sorry, just a second. So how many people are interested, okay, to invest into the particular asset. How you can see that, that's a bit more complicated, but we're gonna, by saying market interest, it's basically, it's okay, that's a bit misleading because I'm saying market interest and volume, but I'm in the same thing, because if the volume is rising, that means that there is more interest to invest in that particular asset. So it's a bit misleading, Sinak. You're absolutely right. So I'm gonna change it and make it equal. Where is it? Because volume represents the market interest. So my bad, really sorry for that. And if I check if I go through my next slide, you're gonna see that. So if we're seeing rising volume, that implies to more interest into the market, and more precisely bullish interest. Okay, if we are in an uptrend. If we are in a downtrend and we keeps having rising volume, then this represents more interest to the market from sellers, from bears. Is that clear? So, okay, over here I have two examples: a rising price along with a rising volume, and a rising volume along with a falling price. So what that means is very simple. That since we are seeing, so let's ignore what actually happened in the end and start with the beginning. We were seeing assets moving higher and higher and higher, and at the same time, slowly, volume was increasing as well. So that means there was a lot of bullish interest. More and more people were entering long, more bulls were entering into the market. So that indicates the continuation of the upwards movement. On the flip side, if we are in a downtrend, so we're seeing our assets falling and falling and falling and falling at the same time, however, volume is increasing. That's also a good thing, because it means that the asset will continue to extend further to the downside. So more and more sellers are interested on the market, are interested. So the downwards movement expected to continue, so we can enter the asset short. You see, that's how you should firstly try to approach the market. Check your price action, check your candles. You can keep your indicators on. It's okay, fair enough. So check your candles, whether you have consecutive bullish one, whether you have consecutive higher highs, consecutive higher lows, etc., or whether it's well above all your moving average, etc. So check your price action first. Once you finalize your opinion, let's say, based on the price action analysis, then check your volume in order to identify whether indeed what you spotted on the price action is actually accurate, let's say, or as much as accurate as it could be. So So it's to give you further confirmation whether the trend is getting stronger or weaker. So yeah, so that's the resume. Rising market along with rising volume implies to further upwards movement. Rising market along with the decreasing volume replies to a trend reversal. So a possible turn to the downside. If we have rising volume but in a downwards market, then it means that it will continue falling further to the downwards. So strong falling market. Can you please send the link to download the PDF? The PDF is on the handout section, dear Ocon. Can you see it? It's on the handout section, so you can download it. Okay. Oops. So increasing prices and decreasing volumes. I want you to stick something on your minds, guys. Decreasing volumes imply to lack of interest. So it's a warning. If you see the volume detecting and detecting, that's a warning of a potential reversal, of a potential end of the trend. So this is hard to wrap your mind around, but the simple fact is that a price drop or rise on little volume is not a strong signal. And a price drop or rise on a large volume is a stronger signal that something in the stock has fundamentally changed. So let's have an example, a bullish example. Okay, bullish signs. So volume, as we already said, how does the price rise on little volume? How is that possible? Oh, I'm sure it is there. So let's see. I need to find an example, but it might not be that hard. Actually, now that I'm thinking it, it might be hard because lately the markets are like everything is like on the favor of dollars. So it might be difficult to find one right now. No, it's really 30 minutes charts or something. We won't be any lucky. Maybe with gold or something, no? Really? Okay, we have it. You have a really difficult task for me, dear Sinan, because you know the markets lately are, it's everything about. There's a lot of volatility, there's a lot of market interest, dollars on bid. So it's basically, there are a lot of, okay, there's a lot of interest in the market. So rising. Actually, I could go vice versa. Okay, I cannot find an up-to-date example, but I can show you something. So something from a previous example, okay, a past one. I mean, okay, let's emphasize on mid of May on the US oil. Okay, so just put that. I cannot find the current, current example, but over here we have an upwards trend, right? You see that? Let me just zoom in so we can focus on that. An upwards trend, right? The price was rising, but after a rise on the volume started detecting. right? So here, okay, the indication that this uptrend is about to run out of steam, where actually, this is the indication started from the 10th and 11th of May, 11th of May to be more precise. So as the market was moving higher, the volume was detecting, indicating that, you know what, at some point it will pick and will reverse. And this indeed happened here. So strong bearish candles breaking the 50 period moving average, and more precisely, let me get rid of this red line. The trend line that I have set by connecting the volume was broken. Okay, so that was the reversal confirmation. It's not an ideal example, dear Stinan, but it's an example. And it's a true example. I mean, there were signs that it is about to make a correction or a sharp reversal, which indeed happened. It happened and reverted nearly more than 70% of this move, this rally. Is this clear? It's not that there are little trades, it's just there are less than before, and less and less and less. It might not be a huge amount, but it is what it is. It's a lack of interest. So people are like, fewer and fewer people were jumping into the US oil, for example. And so that's why the volume detected. I mean, you know, people were turning their money from, they're shifting their money from one asset to the other because they have seen an opportunity elsewhere, etc. It doesn't mean that, no, volume cannot be manipulated. It's just, you know, it's like every single one of us, Sinan. Today you might be interested on trading gold. Tomorrow you might think that, okay, I have seen something and something triggered my mind in euro dollar, so I will shift my money there, and so on and so forth. Okay, so let's get back to the slides. Volume can be very useful, as I said, in identifying bullish and bearish signals. Over here we have bullish example. So you can see that volume was increasing for many days. Okay, that's a weekly chart, so it's a very long-term chart, but this is an example. So volume was increasing. It was increasing even when some days we had a bit of a correction. So it was keep rising and rising. However, we had a really strong downwards candle over here, weekly candle, which presented with a big spike in volume. So that was an indication that the volume has now turned from bullish to bearish. So a lot of sellers jumped into the market, and that was an indication. This huge daily candle, along with this spike of our volume, was an indication that a further move downwards will follow. Okay, if the price of the move back lower stays higher than the previous low and volume is diminished on the second decline, then this is usually interpreted as a bullish sign. Okay. So you see, further decline has been presented, indeed, down here. Then the next day, it came higher, consolidating a bit, posting a new low, but it was higher than the previous one. And during that time, so the second low was higher than the previous. So that's a bullish side. On the flip side, we could see the volume detected. So that means that the fall has run out of steam. So bullish signal here that This is an indication that the downtrend is about to reverse, and indeed slowly started appreciating for just not a limited for a limited time. So it's not something easy. Why is the bearish candle spike shown as green? Oh, remember the I'll take you a step backwards. So okay, I should have put it. We should put a lot of. Okay, what you should have in mind is that it. Okay, actually, let's go. I think I put it somewhere in my slides. No. Oh, yeah, I did. Okay, so okay, I want you to focus over here. The green bars, okay, the green volumes are printed if the asset closed close higher, close up for a period, and a red bars indicate an asset close lower for a given period. So you see that? Okay. Okay, close lower. So the next day we have this red volume. Close lower, so red. Close higher, so green. So each bar represents the previous day's performance, okay? Not the current day's performance, the previous day's performance. So how the candle closed. Is it this a bit misleading? Okay, have in mind that the color is not so important. What is important is whether the volume is increasing, posting higher highs, or whether it's decreasing. This is the significant. Don't worry, guys. I have more examples. The previous one wasn't that successful, but I have more. So it will be slowly we'll start to understand what we're talking about. Just a second. Okay, so let's move on. No more questions are coming. That's good. So, okay, let's focus a bit on the exhaustion moves. So, it's what we just saw earlier. Exhaustion moves. Oops. So exhaustion moves like really big candles, massive candles. They usually, you see, I mean, if we compare previous candles, you can see how massive this candle is, or these ones. Look at that. That's S&P 100, which managed to reverse in just 2 days the performance of the last nearly 2 months. So look at how big this candle is. So every extreme move tends to be combined with a really sharp increase in the volume. Really sharp increase in the volume. Can you see that? Okay. You see that? I think, is it the same? USA 100 daily, USA, yes, it's just, you can see clear over here that what this sharp massive candles. These massive candles, what they cause to the volume? They cause really a big spike, a sharp increase in volume. This is something that signals the potential end of a trend. Okay, so you know, every extreme move like this one to the downside, it cannot, I mean, it's extreme, it's already oversold. So it doesn't have a lot of further space to the downside. Okay, so it's better to really avoid this kind of situations. It's better to wait until the markets calm down and afterwards to decide to take an entry. So the most of the market participants who waited and are afraid of missing more of a move piling at the market stop, exhausting the number of buyers. So in a rising or a falling market like this one, okay, in which we can see extreme moves, sharp moves combined with sharp increase in volume, this signals the end of the trend. So at this bottom over here, the prices will eventually force out large number of traders, resulting in volatility and increase of volume, right? So that's usually the case at the market bottom. When the prices are falling sharply, we see phase out a big number of traders, something that results to volatility and something that results into increasing volume. We will see also a decrease in volume after this spike. So after this massive spike, we're going to see the volume detecting, right? But how volume continues to play out over the next few days or weeks or months can be analyzed using the other volume guidelines. So the detection is not necessarily bad. Why? Because it simply shows that there is no further steam to the downside after this such extreme move, okay? So a reversal might follow. Indeed, we've seen slowly some appreciation with the asset trying to recover some of these massive losses. So that's why the volume over here was steady a bit, okay? So that was an indication, this detection and also this sideways, pretty much sideways volume indicator, it suggested that there is no further thing to the downside, a correction is necessary, and this is what we saw afterwards. Yeah. So you should avoid these extreme moves. If you see sharp moves, such a big move, sharp moves, combined with volume spikes, then that means a potential end of a trend. So you need to wait a bit before entering the market again, to wait for any confirmation of that we found the bottom of it or we found the top of it, etc. So also another indication for a potential end of an uptrend are the consecutive price candles that makes lower highs, or the consecutive volume bars are heavier from the initial spike. Okay, that means that is run out of steam. Okay, the volume indicator I showed before, it's over here on the navigator there, Auto. Should drag and drop it, okay? Drag and drop it. Exhaustion moves a volume. We have seen that, sorry, my bad. Okay, this is the same It's the same example, but in a 4-hour chart. So first, let's take a step back. Okay, that's the daily chart, right? Remember, I'm going to zoom in, and we saw on the somewhere 15th to 25, was it 25 of January, sorry, detect consecutive downwards channel candles posting lower highs, right? So something was that should trigger our attention, say bearish candles, 2 consecutive ones, falling highs, I mean lower highs. So what's going on? So if you have initially saw that, or even that massive decline, you could take a step backwards. So that's a daily chart, and you could step backwards and start investigating your 4-hour chart. You see? So let's take. Sorry for that. So, okay, no, my bad. My example is on there. Come on. Sorry, guys. Starting from March. So okay. Okay. Okay, I will zoom into this. Okay, so 1, 2 highs, 3 highs, started falling again, posting a higher low still, so no indication that it will go down. That was a bullish actually alarm, but as it started cross below its 20-day moving average, consolidate a bit until it did another massive candle, breaking the previous low and closing outside Bollinger. Okay, so over here, however, we had a rise volume. So falling price and spike in volume. So what's going on? That's during March. We're going to the 4-hour chart, so a step backwards, a step lower. What we could see in the 4-hour chart is that after it topped, so that top is the same as PowerPoint doesn't make it any easier for me. Is this one, okay? This one. This top in the daily chart is what we are seeing here. Okay, are you with me so far? So topped, right? Started falling and volume started rising, and quite steadily, rising steadily. Falling, 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 rising, 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 rising. So that was an indication. I mean, even if you missed all this, you could still see even if you missed all this decline, you could see that the volume was increasing. So there was still a lot of interest from the sellers to enter into the S&P 500 to the downside in a selling position. Okay, and you could see that regardless of some correction, that interest was keep rising and rising. Okay, until it finally started slowing down at that point over here, and started getting lower here, right? So at the very end of the trend, of the actual trend. So I think the volume delay is much as the 2 big red candles which close below were captured by the volume as green, which implies close above. Check what you're saying there, Aldo. Okay, let me check something. We're captured by the volume as green, which implies close above. Two. So this candle, boom. Okay, let me check your question. How do we lay it in the chart? I think the volume there is much as the two big red candles which close below were captured by the volume as green, which implies close above. Let me double check out because now I'm getting a bit confused. So what we have is, let me zoom in a bit. So, okay. So if the close to the, okay, this close, for example, means that it closed higher, the screen because it closed higher than the day that the previous day's closure. That's correct. So it's okay that it's green because it closed higher than the previous close lower and previous candles close. Over here, once again with the red, we have close lower than the previous close. Lower than the previous low. Red. So we are getting green bars if the asset closed higher on that particular day in comparison with the previous day's close. A red volume bar, it should be when we're getting when we are getting when the asset is closing lower on that day compared to the previous day's close. Okay, but you need to consider. Okay, I know where is the confusing thing. I'm gonna go. Okay. You know what? Let's get back to. I know. I can explain. Okay. Not here. I want the volume English. So volume up, green. Volume down, red. That's correct. So let's simplify things, guys. You're right. It's a bit confusing, but it's the color. Okay, the color is taking two considerations. It was my bad that I haven't clarified it in advance. Okay, it's taking, first of all, into consideration the, can you see, it was a bullish day, but the candle closed lower than the, it closed higher than the previous close. So it should have been with green, we could claim, but the volume was lower than the previous day. That's why it was placed with red. Okay, the same stands here. Okay, that was red because the volume was also down and it was a bearish candle, so it's red. Here we have bullish, but it was interpreted with red because the volume was down. So it takes two things into consideration. It was my bad that I didn't clarify. The volume that we're seeing in the MT4, that particular one, it takes into consideration whether the asset is closing higher than the previous day's close and also whether the volume is lower. If the volume is higher, so if both criteria are met, then it's with green. If not both criteria are met, R is with red. You see that? No, it was my fault, out, my mistake. Okay, it was my mistake. Okay. Yeah, that's why we should mainly focus on so that's why the color is not so important, because even if we ignore the column, we can see that the volume detected over here and detected. That's why you shouldn't really focus on the color, but on the body, okay, on the body. And it's 1 hour already, we haven't gone through the indicators. Quickly, bullish signs. So falling, and I don't really need to explain a lot over here because we have consecutive bearish candles posting fresh lows, and at the same time we have seen an increasing of volume, a bit of a correction over here, but start rising again. So that was an indication that there is further steam to the right, that downside, right? So even if you were in a doubt over here because it was slowing down, it was just a temporary correction presented here before starting rising again. So over here, you could still say, had the confirmation that it has further steam to the downside because volume started increasing again. So after these 3 bullish bearish candles and this rising volume, we could enter again for further steam to the downside until it finally break your trend line, implying or suggesting that have in mind that we might end up and the trend might reach to its end. So keep in mind that any oversold condition combined with a spike in price in the volume might be a sign that you should get out of the trend, close your positions because it's running out of steam, okay? Because it's an indication of a reversal. So you see that 2 spikes breaking my trend line, and at the same time, let me clear a bit this mess. Come on. You see, first indication, first warning that, okay, if you're in a selling position, you might consider closing it anytime soon because there is a possibility for the downtrend to reverse. Then it chopped a bit, it moved sideways, making another spike. Another question mark. Has it run out of steam? But it wasn't really a question mark because if you notice, I have 2 fractals over here. And the second one was higher than the previous. So that was a bullish sign. So bullish sign over here, along with these double spikes of the volume, indicated that my downtrend ran out of steam. Okay, so I might consider closing if I have any existing condition positions or short position because the market is about to change. Okay, so volume increases on a falling market, that's perfect, we can enter short, but as soon as we get spikes of the volume with bullish signs of the price action, we might consider closing our positions. Or if we haven't, if we don't have any open position, we might consider keep monitoring the market because we might see a reversal. Okay, so there was a bit of a reversal, temporarily one. Okay, you can see 1, 2, 3, 4, 5 candles higher, a reversal down, retesting the bottom again, another upwards movement. So it entered a bit of a consolidation mode. So it was tumbling between those 90, 17, 80, 85, 88, 40 area. So up, down, reversing all the gains, up, down again, corrected, down, down. So it was tumbling a lot, but look at that. Higher, higher low, and then another higher low from the higher than the initial bottom, but lower than the previous bottom. So that's something that you cannot easily find. So you see a bottom, higher low, and then another bottom which is in between those two. So lower than the previous and higher than the very initial one. But at the same time, we can see this kind of performance in volume. So that was the top, right? So it was, you know, volume is a bit before the time. I mean, it's an advanced indicator. So volume was here, it was at its peak. It was in a downtrend. Okay, that was the latest lower volume. So we connect our trend line. Then over here, we had a bit of a spike. So I tried to connect this top with my initial top over here. And I could see volume decline over here as the price was increasing, and another decline of the volume over here as I had a fresh low that it was between these two. So this is something, it's information that you cannot easily spot, but if you do, that's a bullish signal. Okay, it's bullish because it means that even that the sellers tried to push against the asset lower, but it didn't manage to turn it down to this bottom, to the latest bottom. So they failed. Instead, they appreciate again. And that's a very divergent signal, I could say, but that's a bullish sign. It's very rare, but if you spot it, it's a bullish sign, which you can confirm later on. I mean, it's a very initial bullish sign. You cannot enter a position as soon as you see that. You need to wait for confirmation. So the confirmation came pretty much when my asset broke these latest two highs and start with the volume start rising again. So I had the break over here and confirmed with consecutive bullish candles, and also my volume was increasing. So that was when the confirmation of a bullish sign came. So again, it's a very rare pattern, but if you're lucky enough and you identify something like that, that's a bullish signal that will happen later. Okay, not on spot, later. You're gonna get strong signals only if we have large volume. Okay. Summarize it. Hi, what does it mean when the volume is very low but the price action is extreme? It means that it's over exaggerated, so it might doesn't have further steam, so it might stop. It might quickly, might have reached its bottom or its peak, regardless of so it might revert. So you need to wait until you, like here. So okay, actually right here, let's take this as an example. You see, you said that what does it mean when the volume is very low but the price action is extreme? Do I have an example here? No, I don't, but I have the previous one, which we had some massive extreme candles. We have massive as well. Actually, no. This case that you just described is this one, which we have consecutive extreme candles with oversold conditions, outside Bollinger's, so that's extreme. So it's an oversold condition, but the so far volume was poor. Okay, we start seeing a rise in volume a day after, But what that means that this decline is running out of steam. So this is what it means, and you're gonna see it afterwards, like what happened here. We were getting low volume, so there was lack of volume, there was lack of interest. So it means that even if the asset is oversold or overbought, it means that sooner or later we're gonna get a reversal. This is what it means there, Shinan. So we need to be a bit patient until we have a confirmation, okay? So volume indicators, we have 4. The volume that we already show, the OBV on balance volume, the MFI, money flow indicator, so how much money are entering the asset right now per specific period actually, and accumulation distribution line. Okay, so these indicators, so if you feel that you're struggling with this one, you can alternatively use the others, one of the other ones, the one that you understand the most. Okay, so I understand that the one that I have already shown is not easy. So there are other options. Okay, the volume, the one that we covered so far, is not a precise entry or exit tool indicator. It helps give us some signals for the days ahead or hours ahead or weeks ahead, depending on which time frame we are, but it doesn't give us precise entry and exit levels, okay? So that's why you can alternatively check or use one of the others. And obviously, as I said, first of all, you need to check the price action and then the volume or the volume indicator. Okay, all actually the volume indicators are based obviously on mathematical formulas, right? So, but each one of them is slightly different. So you need to find the one that works for you. If the initial one that I presented so far is not ideal for you, you're struggling to understand it, then try one of the others. And we're gonna see right now the others. So, okay, let's start with on balance volume. So it's a volume indicator, but at the same time it's a momentum indicator as well. So presents us momentum, strength. So as we already said, if you're seeing an increase in the volume without a significant change in the price of the asset, the price will eventually jump upwards and vice versa. If you're seeing a volume decreasing sharply without a significant change in the price, then the price will eventually fall, okay? So that's what you should keep in mind, because volume is an advanced indicator, right? So it shows something to you, it shows a signal that it will happen soonish. It doesn't happening already, it will happen soonish. It's an advanced indicator. So let's focus, however, on OBV. So OBV looks like that. It's a line, like an RSI line, like an ATR line. It's plotted as a line, unbounded one. Okay, so OBV, on balance volume, is simply an indicator. It's quite an effective one actually, which starting from an arbitrate number, volume is added when the market finishes higher, or volume is subtracted when the market finishes lower. So that's why we are getting this running total that it shows like a line. So it can also show divergence, such as when the price is rising but the volume is increasing at a lower rate, or even beginning to fall. So let's check. So let's have the figure on, to understand what we are talking about. You see over here, the asset was falling. So if I connect the highs, I I could get a downwards trend. And the volume was declining as well. By connecting the peaks of my OBV, I could get a downwards trend line as well. So if price is getting lower and OBV is also down, okay, that suggests that the volume is declining, so this downwards trend might run out of steam. So as soon as we see our trend line, can you see this red line over here, broken, so the volume to start increasing, breaking the previous trend line, that's an indication that a new trend has started. More precisely, an uptrend has started. Here it was a break. Look at that. The volume broken my descending trend line. The price action also extended for 1, 2, 3, 4 days in a row above my downwards trend line, both indicating into a bullish signal. Is it clear? Let's take it step by step, Shola. Now, let's take another example. So we were in an uptrend, connecting the lows. We could see that it's going up, right? Volume was increasing on it, perfect. So we could jump in the market and enter long as well because volume was rising, price action was rising, so there was further steam to the upside. Okay, but you need to put your trend lines on because with this way you can identify exit levels. So an exit level would have been actually when the volume turned below the trend line. So over here was the very first indication, or even that one, so that was a bit late. As soon as it crossed below, and at the same time we could see this gap down, it was an exit warning. Okay, that was an exit warning. You see that? You could say, but Andria, afterwards it continue higher. It's okay. Why not closing over here in order to lock some profits and to re-enter afterwards? You never know what will happen until it happened. So since you have seen that over here, not only your volume fall sharply, but you also suffered a gap down with the asset falling below the upwards trend line, then why not being safe? Sorry. So close your positions and you can re-enter afterwards. As soon as you have another signal, you can open again position. Is this clear? You see, it corrected sharply, it found a bit of a support, consolidated a bit, started rising. We weren't really sure what's going on. We had a massive incline over here, okay? But at the same time, we could see a sharp rise over here, then correct it again, right? Fall over here. So I could connect these lines, right? I connect these lows out as well. So I was having another trend line and another trend line by connecting the lows in the price action, connecting the lows in the volume, and I could see that they were both rising. So since they're both rising, I could enter long over here because I had the confirmation that they both right, they are both rising. So I could lock these profits. Okay, don't get greedy. If you see a warning, take an exit. So OBV, if your OBV is rising and at the same time your price is going high, you can enter long. However, if it's vice versa, if your OBV is rising, if your price action is rising, but your OBV is falling, then you might consider taking an exit. If your OBV is falling, right, it's falling, and you are in a downtrend, that means that the trend is about to reverse. But if you're in a falling trend and your OBV is rising, what I said, if you're in a downtrend but your OBV is rising, then you can enter short. Yes. Did that confuse you? Hopefully not. Divergence. So if you're getting opposite signals, so rising market, so by connecting the lows, you're getting a rising price action, but at the same time you're getting a downwards volume, then it means divergence. Okay, so if you spot divergence, so rising market, but OBV is either dropping or it's flat, then it's a bearish divergence. So that's an indication that an entry could be taken on the break of the trend line. So as soon as the price action breaks your trend line, so right here, you can enter short. Okay, you can enter short with stop loss above the latest high fractal. So either here or even here. Or if you have a falling market, but you're having either a flat OBV or a rising OBV, you can take a long entry as soon as the price breaks and closes above the trend line. So here is a nice entry point. Long entry point with stop loss either the bottom of the previous trend or the latest low candle, lowest low, the previous low, with target either the latest high fractal or the one afterwards, or based on your risk and reward ratio. That's up to you. Let me know if you're struggling, guys, okay? 23 minutes past the hour, so, and we have many slides. Okay, I think I will say okay so far. I will quickly cover MFI as well, and I will close it a date, and you can check the examples on yourself and let me know if you want me to explain further anything else. So MFI is very, very similar to OBV, but is ranging. I mean, it has a range. It's in a range, so it's from 0 to 100. So think about it. It's very, very similar to RSI. So if the MFI is above 80, that means overbought. If it's below 20, that's oversold conditions. Okay, so it shows volume and obviously buying and selling pressure. The default one is on 14 periods. So as I said, anything above 80 is overbought, anything below 20 is oversold, and you can use it to identify reversals or price extremes. So MFI is pretty much measure the enthusiasm of the market. In other words, money flow index. Okay, how much money are traded in that particular asset. So how you can use it? Very, very similar with OBV or any other indicator that we showed earlier. Okay, as price falls, if the MFI falls as well, so not like every other, sorry, my bad. So you need to treat MFI like you're treating RSI. So as price falls, if the MFI falls as well, that suggests that there is further steam to the downside. So there is a lot of selling pressure. Really? Okay? As if they are both falling, that's selling. If they are both rising, that's buying. However, if your asset has breached oversold conditions, overbought conditions like here, okay, then as soon as it turns below 80, you should consider taking an exit if you are in a long position. Can you see that? So rising price, rising MFI. So that's buying pressure, so I could enter long. As soon as it crossed 80, okay, that's fine. There is furthest into the downside, but if you see it like here, starting turning lower again, like here, or even crossing below 80, you should close your existing long position. Okay? On the flip side, falling price, falling RSI means short positions. But as soon as you see it turning below 20, like here, you should consider closing your existing short position. Is that clear? I think it's more straightforward than on the rest that we have seen so far today, okay? Guys, I need to call it a day because it's getting very lengthy. I'm really sorry that I didn't manage to cover it on time. It was a lot of slides. I would like you I have to give you the slides. I would like to spend some time checking the slides, okay? Checking one by one, and if you have any doubts, questions, please come to me. And you know what? I'm gonna try and cover it again in August. I'm gonna repeat that webinar. But I think it's very straightforward. I mean, if you check the bullet points and the examples, I think you will understand. They're not so difficult indicators. I mean, the difficult one was the very first that we covered, the volume bars. MFI is really straightforward because it's exactly the same mentality as RSI. So if you're confident with RSI, you will be with MFI as well. And remember, divergence is also a case. If we have higher price action but lower MFI for the same exact period, that means bearish divergence. So that means that our asset will soon reverse to the downside. And this is what it did happen. Boom. So if we had to use a trend line here as well. Here as well. So on the breakout of our trend line, it could be a selling position until it crosses below 20. And as soon as it crosses below 20, that will be an exit point. Another divergence over here. Our price was falling, but our MFI was rising. So by either adding, why not adding both, right? Adding a trend line, also connecting the highs on our price action, connecting also the highs. Okay, was flattened, connected the highs of our MFI. As soon as either the price action is broken or the MFI is broken or both, ideally, why not both? That's a bullish sign. So we can enter long. George, I have the slides over here. I mean, it's on the handout section. Can we check on the side? Can you open the handout section? As soon as you open the handout section, guys, it should be this, right? You're seeing this, right? Are you seeing this section, handout? It should be somewhere saying handout. So George, it's over here. You can download it. Let me know if not, okay? I'll wait for a reply from George. No? George, any luck? Have you seen the handouts, guys? Guys? Come on. George, can you hear me? Can you hear me? Have you found the handout section? Okay, until I got a reply. This is the accumulation distribution indicator, not bounded, not in a particular range. It's not in a bounded, but the higher the lows, along with the higher with an uptrend, suggest confirm further upwards movement for the asset. On the flip side, if the price is falling, okay, and at the same time we have seen lower lows on the indicator. So if actually, first of all, if falling price is combined with a falling indicator, that confirms a downtrend, okay? But if we stop at some point having lower indicators, so lower lows in the indicator, and we're starting getting higher ones, okay, then might be the very first sign that something is about to change. But in order to get a confirmation, you need to put your trend lines on in order to investigate any breakout, because this breakout, along with this spike on the AD, it was a confirmation that this downwards move ran out of steam, and now a new uptrend start developing. Okay, there are plenty of slides and examples. Please go through them. I cannot do it now. I promise I will repeat this webinar again in August. Check a bit the slides, come with questions. I'm here to help with anything you need. It's very useful. So also if you attach screenshots on your email, will help me to explain you if you have a particular asset that you want to check and you want to use volume indicators, then attach your screenshots as well. Sorry that I haven't been able to cover everything on time. I would like to thank you very much for being here for an hour and a half. That's massive. Wish you a great day ahead. Take care and see you again tomorrow. So Stuart is having a webinar tomorrow, and his webinar is about daily FX option expiry. So how to trade the daily FX option expiry. Okay, it's not, it's not something common, but something that you might find interesting. Depends if you're a trader that trades also commodities or stocks, and in general assets that they have expiry dates. So it's a different approach. So how you could trade an asset that its contract is about to expire and renewed. So, and how can this impact the market and us as Forex traders? So thank you very much for attending. Hope you're having a great day ahead. I'll see you again tomorrow with webinar, with a Facebook Live as well, and on Thursday with a Facebook and YouTube Live as well. Visit our webinar page, dear precious, webinar page, and you can register as you got registered in this one. Okay, thank you very much. Have a great day ahead and see you again tomorrow. Bye bye.